Welcome back. Earlier today, the JOLTS survey was released. That stands for the Job Openings and Labor Turnover Survey. What we'll find interesting is that depending on where you read about this, there are different spins on whether this is good news or bad news. This is from Yahoo Finance, the Job Openings and Labor Turnover Survey for October. Results came in lower than expected 8.7 million domestic job openings. That represents a decline of over 600,000 from the downly revised 9.4 million. All in all, this is from Reuters as well. All in all, what we see is a massive decline in the number of job openings, and we break it down by the sectors. Here's all job openings in a non-farm sector, which represents most jobs. This is in thousands, by the way. 8733 is the current figure. We can see this is the lowest low we've seen in quite a while. Actually, going back to May of 22, we see a downward trend, so to speak. And this is reported again in thousands of jobs. This is the lowest low we've seen in several years now. Less job openings than we've seen in quite a long time among all different types of sectors. On a month over month basis, we can see the total non farm figure. That's the overall numbers down 7%. Leisure and hospitality down 10%. Healthcare down 14%. Healthcare is a big deal because healthcare represents the strongest sector within the economy, and that is down 14%. Retail trade down 16% in light of the holiday shopping. That's a little bit disturbing as well. Education, health services down 12% as well. Very little bright spots over here. Government job openings up 2%, but that's about it. On a year-over-year basis, it's really the same story. Construction up 6%, but what we're going to see is that might be seasonal to an extent. Government jobs year-over-year up 4%, but everything else is down. Retail trade down 34%, healthcare down 25%, leisure hospitality down 24%. Lots of red in this report. The green lines will be represent the non-farm payrolls. That's what we know. First Friday of the month. The red represent the job openings in non-farm sectors. So it's a very interesting comparison between two different reports. This goes back to 2021. Just notice the overall trend. What's happening? The red again are the total non-farm jobs within the JOLTS survey, which we're talking about today. It was positive for quite a while, but starting out late 21, early 22, we start to see a lot of red on the map, and that is consistent throughout. The green lines represent the total, the monthly change in non-farm payroll, and that continues to slide to the downside. We're going to get non-farm payroll rather soon, and the overall trend has been actually quite negative. We know the Federal Reserve is near or at the end of the tightening cycle, and I think the poor jobs survey, the poor jobs condition within the economy is probably one of the top reasons why the Fed doesn't want to raise rates anymore. Here's total non-farm openings on a year-over-year basis in blue versus S&P 500 in red. And the takeaway from this is a rather strong correlation. We see the S&P 500 was doing quite well near the 4,800 level late 21 when we were looking at year-over-year total non-farm openings up around the 75% year-over-year basis. Now, of course, you compare 2021 to 2020 during the COVID crisis. That's a little bit of an unfair comparison, but nevertheless, that's a few years ago, and we see negative numbers throughout. And again, not only negative, but actually worsening. We see here three-year correlation in the S&P 500 among the different sectors that are discussed within the survey. The total non-farm survey, 61% correlation, which is quite high. Construction, 62% correlation. And if we have 100% correlation, that's a perfect relationship. But anything 50% or higher to the S&P 500, that's a very strong connection. If we see something near 0%, that means there's no connection. There's no correlation between the two measures. But what we see here are very strong correlations in hospitality. accommodation, food services, construction, healthcare as well. So we know these sectors are closely related to the stock market, and the data does suggest exactly that as well. Here we see a breakdown in terms of the pie chart, in terms of the number of raw job openings that exist right now, according to the current report. The biggest slice we can see is education, health services, trade, transportation, healthcare and social assistance, leisure, hospitality. I would discount the state and local and government sectors only because they're not as closely linked with, the private sector, so to speak. Accommodation and food services, if they're not related to the private sector, it's not as sensitive, I would say, to economic changes. But what we can see here over here are the largest openings of jobs do exist in these sectors that are really being hurt the most. Healthcare, for example, leisure, hospitality as well. So this really does paint a picture as we approach our non-farm payroll number. And it'll be very interesting to see if it's as weak or maybe even weaker than last month's report. We know the Federal Reserve is pretty much done raising interest rates. We spoke about the other day, the Fed Fund futures now give us more than a 50% chance they may cut rates as soon as March. Well, the job situation is a serious factor that the Fed takes into consideration. So keep that in mind. Maybe this JOLTS survey gives us an advanced look of what the job survey may result in, and then we can have a better insight into what the Federal Reserve is looking at and how soon we may see a future interest rate cut. We hope this has been helpful. We look forward to seeing you back soon.